Hello YouTube family, it's your boy Isaac FX back in today's episode. So guys, in today's episode I want to share about types of traders. So now, and we shall talk about their advantages and disadvantages, because everything has two sides. So now let's get on with it. Okay, so guys, now we have what we call scalpers. Now scalpers are traders who engage in numerous trades per day to profit from small price changes, and they usually make entries on their small time frames, like the 1 minute time frame, 30 minute time frame, 5 minute time frame, and 10 minute time frame. So now let's look at the pros. So now they make quick profits from small price movements, whereby they are usually interested in 10 pip movement, 5 pip movement, 30 pip movement, and they close trades. And now they get multiple opportunities in a single trading day. So now you find scalpers get over 5 trades in a day, single day, 10 trades, 20 trades in a single day, as they're trading on small time frames, and they make quick profits out of those trading periods. So now they also have limited overnight risk. They do not hold trades overnight, because they know in case of any change in market conditions they want to lose their profits. So now for them, they are interested in closing the trade within some small period of time, so they don't hold trades for over 24 hours. So now let's take a look about their cons. So now they have high transaction costs due to frequent trading. So now they place many trades, and according to different brokers they offer different spreads. So now you find the broker is offering a big spread. So now you find they are losing some good amount of money through purchasing pairs at a high cost, and they also require intense focus on quick decision making. So now this is where psychology comes from. Now psychology comes in in this decision making, and if your psychology is not so good, they can make stupid decisions, and you press entries not depending on your trading plan, and you end up making frequent losses. So now I also engage in high risk stress and demand significant time commitment. So now if at all there is a loss that has been made in a certain trade, it is going to affect other trades that are going to be taken, because the trader is always conscious, and he presses trades in favor of his direction, even though the direction is wrong. So he ends up pressing stupid trades and forcing the market to go into his direction, and thereby he ends up growing his or her account. So now you can see, and after this episode you're going to determine which trader you are supposed to be and where you must be wrong. So let's go to what we call the day traders. Okay, so now day traders open and close positions within the same day to avoid overnight risk. So now they also use intraday time frames, the minute time frames, and hour time frames. So for them, they don't go for the second charts. They use 30 minutes, 1 hour, and they close their trades within that same day. So now let's look at their pros. Okay, so now they avoid overnight risks, and by closing all position by the end of the trading day. So now they also fear change in market conditions that is being prepared for by the traders. So now they have to close their profits in time to avoid those misconducts of market and misbehaving of the market. So now they also have numerous trading opportunities within the day. Okay, so now they can also capitalize on short-term price movements. So for them, they get 30 pip movement, even 40, 50, and they close their trades. So now let's go to their cons. They require significant time and attention, high transaction costs, and reduced profitability. So they are shortly different from, they are shortly the same as the scalpers, only that for them they go to the 1 hour time frame for entries, and exit of trades. So they are closely related to scalpers. So now let's go to what we call swing traders. Swing traders hold position for several days to weeks, capitalize on short to medium market trends. Okay, so their trades take days to weeks, they take profit and they go out of the market. And this is where my self lies. I am a swing trader whereby I take entries on my forward time frame. I end up getting out of the market within a week, 2 weeks, and I scoop out my profit and work for other setups. So let us go to the pros. The trader can capitalize on short to medium term trends, less time consuming than day trading. So now you spend less time on charts, staring at charts, and this is whereby a trader doesn't make stupid market entries because he has to be patient. So this is where patience also comes in. You have to be so patient and disciplined in that you don't take silly trades. So now the next issue and point is about the trader allows for more flexible trading schedules. That's what I was talking about. This is concerned with patience and discipline. So now the cons. The trader is exposed to overnight and weekend market risks. So now if you are not good at analyzing what you call the news, you're going to fall into many traps and you lose some good profit. Okay, so now the trader requires patience and the ability to hold trades for several days. This is what we call patience. If you're not patient as a single trader, you're going to mess out and you can either cross the profits when it is still early, or you can either close the market when you see the market making seeing the drawdown and yes, it's supposed to go in your direction. You end up closing your trade in the loss and then the market moves in your direction. Okay, so now another issue is about potential for larger drawdowns compared to day trading. So now you have to experience a big drawdown. So now this is where risk management is applied. So now for those who are trading on small accounts, swing trading is not meant for you. Obviously, you have to go through a drawdown. Like some traders go into a drawdown of 24 hours and the trade ends up going into the direction in the next day. So now if you are not patient and you have a small account, it's easily blown off. So now you have to ensure proper risk management. So now let's go to the position traders. So the position traders focus on long-term trends and holds positions for months to years. So now they make entries on their monthly time frame and they have to hold trades for many years. So you find a trader holding a trade for 4 years, 5 years, and ends up getting big and bigger profits. So now the profits vary according to the types of traders, that is being the scalpers take small profits out of the market with small pip range, and position traders and position traders, they take bigger profits with a bigger profit range and obviously high risk management. So now let's get to the pros of position traders. Position traders focus on long-term trends and macroeconomic factors. That is what we call the fundamentals according to news. And so guys, I remember in some video I talked about how to interpret the news, whereby we have to use the economic calendar, and I think I'm going to release another video about the economic calendar and I'll show you how it is being used. So now the next pro is less time intense as traders are held for extended periods. So now the trader gets time to do other businesses out of the charts, so he has to be patient enough to make sure he has to hold his trades because his system depends on long-term analysis and he has to get bigger and bigger profits. Okay, so now another advantage is the trader experiences lower transaction costs due to fewer trades. He has to place like one trade in a month, one trade in 2 months, and he has to get some good profits, thereby he doesn't get much expenses in buying pairs, buying and selling pairs. So you see, you have to be so strategic in this system. Okay, so now let's go and look at the cons. Now, cons, the trader gets exposed to significant market risks over time. So this is where the fundamentals come in again. So now you have to analyze the charts, and remember, they are dangerous news that are going to make spikes, and you have to lose a lot of profits if the market doesn't go in your direction. So now that is the CPI, NFP, and the GDP, sometimes for MC, so and so forth. So now you have to make use of the economic calendar and cross your profits in time. So now the trader requires a deep understanding of fundamental analysis. This is where the economic calendar comes in. The trader has the potential for substantial drawdowns during advanced market movements. Okay, you see that the cons and pros sound red with the swing traders. So now let's go to number 5, the fifth type. These are called event-driven traders. So these are also called the fundamental traders, and traders who make entries basing on their fundamental analysis only. They only trade the news. So they trade the CPI, NFP, and they don't go into the market in case there is no news release. And remember, guys, the news are a source of volatility in the market, and this is whereby such traders are interested in that big movement. So that big movement can either give them big spike, and in case the market goes to that direction, they make huge profits. And this is the same thing in case the market goes into their stop losses. It has to spike them, and they make losses in seconds. As you know, there is a first move and the real move after the news release. Now the entries, the time frames varies depending on the event impact. They also use the tools like the news feeds, economic calendars, and the fundamental analysis for news updates. So now let's go to their pros. Opportunities to profit from market moving news. That is when the market moves in your direction. Now the trader can take advantage of high volatility periods, so the market moves smoothly in one direction, and eventually the spike moves. So now if at all your market was moving in the direction, the TP is hit instantly, and you have to get profits as soon as possible. So now the trader is often short term. The trade is often short term, reducing exposure to long term risks. So now profits are scooped in seconds. Now you can see where you must lie. So now let's go to the cons. The trader requires constant monitoring of news and calendar. So now the trader takes over minutes staring at the market movement, and this also increases the pressure of the trader, and he ends up making also stupid mistakes, and he makes instant entries, and he ends up over risking his or her account, and this causes growing of the account. So now we also have high risk due to market unpredictability around news events. So now this is where gambling comes in. Find a trader is also using stop orders by setting buy limits, stop limits, and eventually the spike comes and they are all activated, and he puts his account at stake. So trading fundamentals, if you're not a pro, I see that as gambling, because you don't know whether the direction of the market is going to take place. So let's go to the last point. Trading can be difficult to predict. market reactions accurately, because you cannot interpret what's going to be released in the news, especially on Bloomberg television. Those who watch YouTube, remember on that day of release, you normally see Powell speaking, the Federal Reserve's giving the instructions, and you see the spike immediately. So now it is very hard to determine the market direction on that very day. So now guys, I hope this was so insightful. Make sure you like, share and subscribe this video. Give it a like, thumbs up, and guys, let's do it a favor and share to our brothers and sisters who are interested in this industry. So guys, let's go in peace, and make sure you give it a thumbs up. Okay, bye bye.